morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. It's Monday, October 6th, 2014. Access to this video is for informational and educational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and always do not trade with money that you cannot afford to lose. Well, quite a week we had in the market as we look at it, and we see that looking at the Dow, looking at the NASDAQ, the S&P 500, the Russell 2000, a week it was, and looking at the numbers, we see all negative numbers. Looking at the change for the Dow, we see down 103 points for the week. Percentage change for the week is almost 1%, and year to date still in positive numbers at 2.6%. NASDAQ down 36 points for the week, and you see still for year to date up 7.2%, albeit down for the week of 0.8%. S&P 500 down 14, almost 15 points for the week, up 6.5% year to date, and percentage change down 0.8% for the week, and led by the Russell again to the downside, down almost 15 points, and we see down 1.3% for the week and down 5.1% for the year, as the Russell certainly has shown that it has led to the downside. For those of you that are bears and trade to the downside using options, certainly has provided many opportunities for you. Looking at economic announcements, so looking at the coming week, although we had a lot last week, we see on Monday we have basically nothing. In fact, the entire week is pretty much devoid of anything that really is going to move the market all that much. Tuesday, no big thrill, nothing much showing there that's going to move the market. We do have FOMC minutes at 2 o'clock on Wednesday. Again, not expecting that to move the market. On Thursday, October 9th, we have jobless claims at 8:30, which we have every weekly, giving us a report on last week. And we have wholesale trade numbers coming out at 10 a.m., the big day of the week, which is taking place on Thursday. Friday at 8:30, we have import and export prices. As you can see, not a whole lot going on for the week that's really going to move the overall market. So a week devoid of any major economic announcements. What are we going to expect next week? Well, we'll look a little later at our market forecast. Looking at our trend, we see that we moved a bit lower on the market. As we say, a bit of a pullback. We had a high not all that long ago. In the month of September, we had an all-time high. And then as we move forward, we see that we have lower highs and lower lows. There's a low and a high and a big pullback. Not even, we call that a high, just getting lower lows. There we are. And we see that Thursday gave us a big low to the downside. A bit of a pullback in the overall market as we ended the month of September with a bit of a pullback, or certainly a defensive position for the month of December. Let's take a look at a little closer looking at the last 5 days of the month. And we came to Monday and Tuesday. So there's Monday and there's Tuesday. As we see, I saw a bit of defense taking place as the month of September went away. We see we were rather flat the first 2 days of the week, and then look at what happened as we looked at the rest of the week. Came into the month of October, big pullback on Wednesday, and then we basically had kind of a flat day on Thursday, although it certainly did have a downward spike, which this of course looks like a potential reversal candlestick in the market, as we got a big old doji on Thursday. And then on Friday we had a bit of a move up to the upside. The S&P gained 1.1% on Friday, with 9 sectors ending in the green. This really helped the index narrow the week's declines, which ended up at 0.8% down. And it was down at one point, at this point, down almost 3%. So a bit of a move up on Friday as we see things pulling back. We've certainly got some resistance up above us. The 50-day moving average sitting right in there. 30-day moving average, and certainly a long way away from that Bollinger Band. Are we going to get back up to those levels? Well, you certainly would expect to as we come into the best 6 months of the market. So, bit of a pullback on the overall market this week, potentially setting up things to come. We never did hit the 200-day moving average. Could we head back down toward that 200-day moving average? Well, so far we are getting lower highs and lower lows as we pull back. But this is not atypical for us to see the market do this as we set up for the year-end rally, which usually begins sometime in October and continues right on through December. Remember, not a whole lot has changed. Market on Monday, Tuesday, and Wednesday was focused on global events. We had some economic announcements come up on Thursday, and we saw what the market responded as it again returned to what we might call more away from the international move and looking at our own numbers that came out as we had some interesting economic numbers come out on Thursday and Friday. So looks like a turnaround as we look at the futures on Monday morning. We see the futures are up by 8-9 points as we are headed towards that opening of the market. Futures already, of course, opened up Sunday night. So with that move, we see that we're again in an up cycle in our overall move for the coming into this next week, the second week of October. Looking at the Dow, we see very much the same thing as we had our previous high taking place in the month of September, and we got this bit of a pullback as we set up for this year-end rally. Did not again hit the 200-day moving average. Certainly a big gain on Friday as we see the market respond and looking up. And how far is this going to go up? Well, we'll see whether we get a higher low or higher low. Don't be too surprised to see this thing head up for all-time highs again as we come into the best 6 months of the market. NASDAQ had a bit more of a pullback. Look at that. Didn't get that exactly pure doji as we had turnaround Thursday and Friday. Certainly was down a bit as we saw that big tail on that candlestick on Thursday, and then we saw the move up on Friday. Looking for the market to move back up, get our bounce here. We'll see how many days it continues on up. Remember, the Fed still is on the market side. Russell 2000 at this point was down over 10%, certainly into the what we would call correction phase of the market. But we see again that we got a bounce up on this. Notice the big pullback on Wednesday, telling us what was happening on Thursday. Many times we'll see the Russell lead us down, and you had some indication that the market could be going lower on Wednesday. Watch this Russell, can give you some indications as to where the overall market's going. Remember, the Russell down year to date and down 5.1%. At one point it was down huge on Thursday. So Russell had a nice little bounce up, and we'll see if that continues for the week. Looking at the VIX, of course, we got a spike just as big as the spike we got in August. The VIX looking up there at one point down or up to about 18 points. But notice what happened on Friday as things seem to be calming down, and we're probably headed for another movement to this range between 11 and 12.5 to 13 as we see the market beginning to pull, the VIX beginning to pull back, showing less fear in the overall market as we had that spike take place. Looking at the financials, and by the way, could we certainly have one more bounce to the downside? We certainly can. We'll see whether that happens, whether the market is going to give us that year-end run, which so often takes place. Looking at the financials, we see that the financials did exactly the same thing. Pull back below, actually closed right at the 50-day moving average, now heading back up. Hard for the financials to get too upset when you got so much support coming from the Fed. Certainly, if the overall market moves up, we can expect the financials to return to their previous highs. ETF for the financials, XLF. Looking at our bond market, TLT, we see that the bond market had a little bit of movement during this time where we've had this pullback, where we found some shifting out of the stock market into the bond market as we see a bit of a rise. Still haven't reached the highs that we had back in August. So with that thought, certainly was some defensive move into bonds during during that time. Gold showing us absolutely nothing, as gold just keeps getting weaker and weaker. When will we get that rally out of gold? Next, looking at the volume, what kind of volume did we have? Well, we had good volume as the market pulled back on Wednesday and Thursday. Certainly was time for a bit of a correction, and the market showed that it did that. Also had a pretty decent above average volume as we looked at Thursday, where we got our doji. Well, that's not quite a doji, but close to it as we look at the spider. And then finally, we had above average volume both on the spider and the New York Stock Exchange as we began our bounce rally, which took place on Friday. So good volume taking place, as we may see some volume come back into the market as we're finished with the doldrums of summer. Looking at oil, oil down to about $91 a barrel. Talk about oil hitting $75 a barrel certainly will feel good for your gas tank. Oil seems to be pulling back as we kind of broke through that support area there. All right, for those of you that are gold members, stick around and we'll look at our stocks to watch. Looking at Apple, looking at Nike, looking at WW Granger and Google and Priceline. Those stocks, which certainly are expensive stocks, many of them, but but those of you that know how to use options, you can play with the big boys. So with that thought in mind, this is Market Forecast brought to you by Options University. It's Monday, October 6, 2014. I'm Butch Shorak, and I want to thank you for being here.